How to triple your Safemoon tokens now? Safemoon is a BEP20 token dispatched over the Binance Smart Chain BSC ecosystem on March 8, 2021. BSC is a centralized finance (CeFi) ecosystem and a contender to Ethereum's decentralized finance DeFi ecosystem. Safemoon has, in short order, ascended to be Binance's third biggest token by market capitalization. Also, recently a lot of FUD has been going around Safemoon. Despite the FUD, it's shocked its investors by a lot of gains and some major updates. That said, let's dig into the depths to find out how you can make more gains and triple your Safemoon tokens. Hello guys, and welcome back to Crypto Channel. Today in this video we'll be discussing current updates on Safemoon, price updates, and how you can make yourselves rich by tripling your Safemoon tokens. Stick with us until the end. Also, make sure to subscribe to our channel for more daily updates and exciting videos like this. Let's get started. However, before we get into the V2 token, you're probably wondering what the latest news about the iOS wallet is. Well, Ryan, the FUD hound, makes a post on Twitter on Monday. As said before, and we'll say again, we're awaiting a third party to adjust some text to adhere to Apple's guidelines. This app is solid from our end, and we're waiting patiently for this to be fixed. We have zero control over this. Patience, guys, all will be going accordingly. If you probably think this is just another excuse by the dev team, then you're not alone in your statements. Nevertheless, it does not mean that you're not wrong. Ryan might have tried to temper things by saying that all that's left is some text to be adjusted, but right away anyone can tell that it has to be much more than that to cause a holdup this long. This is something that many people are failing to understand. If there was something really fishy going on, then giving a reason as obvious as text heading changing is not a smart move from the team. It's obvious that Ryan is purposely using something akin to a figure of speech, probably to keep the community relaxed. Whatever the case, to explain what's most likely delaying the wallet launch, and it has to do with Apple's policy on payments for in-app purchases. Apple does not permit payments to be made out of its ecosystem, especially if it's an in-app purchase. So Wire would need to fix some back-end issues in order to be compliant with Apple's policies in order for Apple to approve. This is why Ryan keeps saying they're waiting on a third-party company. To speculate that the third-party company is Wire, once the back-end payment issues are sorted, then Apple can approve and we can have the iOS wallet finally. So to advise everyone to be patient just like Ryan advised. The dev team delivered on the Android wallet despite the discouragement of the naysayers and all the drama that happened a couple weeks ago with Hank. We think we should have a little more confidence in them and their abilities. That said, let's now talk about the V2 tokens. As said earlier, the token was to launch this month, but plans have now changed and the token will be launching a little later than planned. As CEO Kareny said, that is the V2 token, will launch a little bit after. V2 is delayed, but not because of development, but because of the iOS delay and the reasons for our restructuring. Should be ready to go extremely soon, however. We'll cover this on the next Safemoon Sunday. So it appears that once the iOS wallet drops, the V2 won't be far behind. CEO Kareny has mentioned something about making the upgrade from V1 to V2 a simple one-click process on the wallet. This is probably why the iOS wallet has to launch before the V2 token is released. Anyway, we'll get to know a lot more about that at the next Safemoon Sunday, which, by the way, is scheduled for October 3rd, so make sure you make it a date so you can get all the details. Anyway, let's talk about the V2 token. The V2 token is a token consolidation. However, many are mistaking it for a reverse split, which is similar in the way they work, but very different in their effects and results. Alright, let's understand what consolidation is and what reverse split is, and then we'll explain with some illustrations. So let's begin with consolidations. Imagine you have a delicious apple pie that is divided up into 10,000 slices. Each slice is obviously ridiculously tiny. It's a micro slice. The pie costs $10, market cap. Therefore, each slice is currently $0.001. This made it possible for people to buy loads of slices for pennies. Some people loved the concept. They bought loads of micro slices. Now, a shop that was thinking about selling the pie slices realized that you couldn't sell just one slice of pie for $0.001 because nobody has $0.001, which means people would have to buy 10 slices at a time for $0.01, or a penny. So John the pie maker and his best bud Papa the baker decide to consolidate the pie slices. He combines 100 slices into one slice. People who had 100 slices now have one slice. John calls this a 100 to 1 consolidation. The whole pie still costs $10, but now there are only 1,000 slices and each slice costs 10 cents. People who used to have 100 slices now have just one, however, they still have the same amount of pie. Nothing changed, people who used to have 1,000 slices now have 10 slices, but it's still the same amount of delicious sweet apple pie. Most importantly, each slice of pie is now worth 10 cents or a dime. More places are willing to sell a slice of pie for a dime because it's normal. It seems less shady. Now, more regular folks say to themselves, hey, how about a piece of that sweet, tasty, normal-sized pie for a dime? Everyone now wants a piece of that sweet, sweet pie, and with only 100 slices to go around, suddenly it seems so much more valuable. Moral of the story? Grab that pie. So, to cut a long story short, they're simply consolidating the tokens. The team is not changing the market cap or anything, and if you're wondering what happens to your tokens after consolidation, rest assured that you're neither going to lose your tokens or your money. Why? Because 10 tokens at $1 is the same value as 1 token at $10. Now, for those wondering why we need to do this consolidation thing at all in the first place, think about it this way. Which is easier to carry, 100 pennies, which is $1, or a single $1 bill? Exactly. Besides, like we saw earlier, consolidation increases the perceived value of a token, which attracts investors. But there's an even more technical reason for this, as CEO Kearney reveals. It's a token consolidation, which is not the same thing as a reverse split. However, there is a technical reason for this. We would have BTC and ETH pairings on exchanges, but at the time of listing we had too many zeros, so the exchange partners were unable to do the BTC pairing. This would solve it. And it's an upgrade. Folks are looking at this the wrong way. Now, some people are saying that there will be a market correction to the original price if our token fails to have any tangible thing to offer. And that is true. However, there's no reason this should happen to Safemoon. We have a lineup of projects and products on the way. Already, we've delivered the wallet and the exchange and blockchain are on the way. We're still on schedule for them. And let's not forget Operation Phoenix. So this consolidation is nothing but good news for Safemoon. With that said, let's address the confusion people are having with the consolidation and reverse split. They are not the same thing, even though they look alike. A reverse split is a new concept. In fact, it stems from stock trading. But stocks and crypto are not the same, even though they might behave alike sometimes. In stock trading, a stock split increases the number of tradable shares. This is a good thing because it's a sign of a thriving company reducing the price of their shares so they can be more affordable to new investors. A reverse stock split is the opposite of this. It's a sign that a company is struggling and at a risk of becoming a penny stock. On the New York Stock Exchange, if a stock price falls below $1 for 30 consecutive days, it could be delisted. This is not the case for crypto. With a company like Safemoon, which has just released its first product and still has a huge backing, performing a token consolidation should not have the same negative connotations as a company struggling to stay on a stock exchange. The only reason it would affect us negatively is if we all panic sell because we listen to the FUD comparing it to a reverse split. It's not the same. It might be doing the same thing, kind of, but it isn't being done for the same reason and it doesn't have the same impact. John has stated clearly the reason for doing this is to allow for more exchange pairings. This is a good thing. To explain further, take note of what CEO Kearney pointed out. In the stock market, companies that carry out a reverse split will be able to issue shares in the future. Now, the problem is that as more shares enter into the picture, shares held by current investors will only get devalued. But it's different with crypto and with Safemoon. Safemoon can't be mined and no new tokens will ever be created. This is why a reverse split is different from a token consolidation. Do like this video. Also subscribe and share our crypto channel. Do let us know your thoughts about Safemoon and what you think might be next for Safemoon in the comments section.